I think Bitcoin, the best way that I mentally model it is the best money ever. It is the most sound money. Algorithmically, it is the best money ever. Anything that touches Bitcoin should be financially impeccably sound. So that is why I think all DeFi should exist on Bitcoin if it touches Bitcoin.
Hey everyone, you're watching Markets Outlook on CoinDesk. I'm your host, Jen Sanasie, joined today by my co-host, Andy Baehr. We are here with the COO and co-founder of Botanix, Alisia Painter. Hey, Alisia.
Hey, thanks so much for having me today.
Of course, thank you for being here. Now, we like to start the show by asking our guests what they're watching in the markets this week. What do you have your eyes on?
Well, my eyes are all on Bitcoin. So I'm actually building Botanix, which is a Bitcoin-based blockchain that's really powering Bitcoin finance. So it's really exciting to see, more and more institutional movement within the Bitcoin space. Bitcoin holding up fairly steadily, right? There's obviously been a dip in the market. There's a broader correction happening, and seeing more and more really exciting news, both from governments, from institutions, from retail, that are all just excited about the next frontier of Bitcoin. Specifically, I think we chatted about that this morning, but one of the projects that really piqued my attention this morning is Chainlink announcing that they're putting macroeconomic data from the US Department of Commerce on chain, and they're doing so on Bitcoin, as well as a host of other blockchains, including Botanix. And it's really exciting to see some of these real world use cases really transpiring and coming to life on the blockchain, and really excited for more and more of these sorts of use cases to really happen on chain and on Bitcoin.
I guess your mainnet blockchain, started operating last month. So congratulations on that. And so what kind of users are you looking for to be early adopters of Botanix?
That's a great question. I think most of the crypto blockchains that you see, they are largely tethered to Ethereum or Solana or other blockchains and ecosystems. And they target this more crypto native user, which is a really, really interesting profile. It tends to be more retail, as well as, the liquid funds and the institutions that have existed in the crypto space. But what we've seen as the largest untapped market in additionality, both in terms of users and liquidity, is Bitcoin. And the profile of the Bitcoiner has also changed markedly over the past 5 and 10 years. So what you think of as a Bitcoiner 5 years ago is very different from today. And that's as a result of two things. One, which is the broader institutional adoption that we've seen take place that I alluded to at the top of the segment. And two, it's the ETFs that have brought in these swaths of retail demand. And so the everyday user of banks, of fintechs, is now getting Bitcoin exposure, and they want to do more with their Bitcoin. And that's where the next wave of Bitcoin scaling and programmability is coming from. And so what we're seeing is at Botanix is all of these users, which vary on the retail spectrum. There are folks who are accessing Bitcoin through an ETF. There are folks that are accessing Bitcoin through their Robinhood or Coinbase account, all the way up to people who hold their Bitcoin in a cold wallet and are very careful with their Bitcoin. That full spectrum of Bitcoiners are now getting to the point where they actually want to potentialize and productize their asset a little bit more. And actually, with Bitcoin's price action, you'll see that there's lower implied volatility in terms of price action. And so what that actually means is that there's much more demand for yield products, financial products that are actually based on Bitcoin, because they want to imply other forms of capital appreciation aside from just price gains. And so that's the broader trend we're seeing, which is Bitcoin is maturing as an asset class, obviously due to broader institutional and governmental factors. And with that maturity comes the inevitable productivity of that asset. And that is what Bitcoin scaling solutions like Botanix hope to enable.
Talk to us about some of the challenges there, right? Because Bitcoin wasn't created to enable these capabilities that we're talking about now. Of course, with different scaling solutions, that capability is coming to fruition. What are some of the technical or security challenges that come with bringing these kinds of products to the Bitcoin blockchain?
I think one really important difference between Bitcoin and Ethereum is that Bitcoin really needs L2s in order to scale, because the base layer, Bitcoin L1, does not have programmability. Whereas you see this discourse in Ethereum whereby these L2s can sometimes be cannibalistic to ETH mainnet, you actually don't see that in Bitcoin. You need an L2 in order to scale because of that lack of base level programmability. And so in that case, L2s become essential in order for Bitcoin to scale. Now, it is very, very difficult for Bitcoin to scale. And that's why, for example, it took us quite a long time to build this product. And that's because it's not Turing complete. There are some inherent technical constraints and challenges, but that is where the most amount of innovation is happening, because everyone is trying to figure out their own way to bridge trust in the most trust minimized way, Bitcoin to layer twos or side chains or other ways to basically play around with that underlying Bitcoin.
This is really interesting stuff. It's the themes that have popped up a lot this summer. There was this report from Galaxy last week, I'm sure you saw it, about how transaction fees have kind of cratered. There are people in the Bitcoin community who feel that there's so much holding or HODLing and not enough trading that actually transactions start to suffer a little bit. And of course, with a lot of trading happening in ETFs, that steals actually transactions from the network or it substitutes, right? And then you may end up in this condition where Bitcoin's success kind of starts to asphyxiate it, where you have half full blocks, you have reduced incentives for miners. And I see that building on top of Bitcoin clearly does that. Although I'm thinking, and maybe you can help correct this misunderstanding, is that the Bitcoin that's going to be supplied onto your chain to go to work is still being held and not really being moved, right? So it does solve the problem of people, I guess, using the Bitcoin network, but it still involves people kind of sitting on Bitcoin and it being relatively idle with respect to the Bitcoin network. Is that correct? Or how do you think about these issues?
I think this is something that we really are not talking about with the broader Bitcoin institutional discourse, which is how does this impact miner rewards and how does this impact mempools? Because mempools are very empty right now, and we're not talking enough about the fundamentals of how Bitcoin as a protocol works. You cannot unlimitedly buy Bitcoin and sit on it and expect it to not react in certain ways because of the underlying economics of the Bitcoin protocol. And so what is really important for us to do, if you care about Bitcoin, is to actually use it and transact with it. So one of the main things that we always talk about is that Bitcoin as an asset is meant to be used. It is meant to be put to work. The original white paper was about it being peer-to-peer electronic cash. That is what it was designed and intended to do. And in order for that, we need to generate more transactions within that mempool. Now, when you're bridging in and out of Botanix, that generates a transaction, right? So you're pegging in or pegging out of Botanix. So that generates transactions. And that is how we basically contribute, right? In terms of adding more transactions to Bitcoin base layer. And we also checkpoint periodically to Bitcoin base layer. And so that's what maintains the connection to Bitcoin base layer. But it is something that we need to talk about much more broadly. And I think with the host of Bitcoin treasury companies, the host of ETFs that are all content to HODL upon it, there's obviously price gains that they might experience, and they might be able to find yield on Ethereum or other blockchains, which is what's happening now. But we really need to bring all of that activity and momentum back to Bitcoin. We're trying to make Bitcoin the home for yield for all of that DeFi activity and bring it back on chain, and hopefully be able to make Bitcoin the source of all of this transaction activity, to your point.
Alisia, how are you thinking that though, right? Because everyone knows you're not supposed to sell your Bitcoin. You're not supposed to do anything with your Bitcoin. It's your store of value. And all of the things we're talking about here can be done on other ecosystems, like you just acknowledged. What needs to happen here? I mean, does Bitcoin need a marketing campaign? How do you bring folks who are, staking, doing these yield generating activities over into the Bitcoin ecosystem when they're already seeing incentives and profits elsewhere?
At this point, I think I've interviewed hundreds of Bitcoiners, funds, investors. And when you ask them what they want to do with their Bitcoin or what they would do with their Bitcoin, it boils down to two core use cases. One is the ability to generate passive yield on Bitcoin in Bitcoin terms, so not necessarily affiliated to tokens or points or anything else or exogenous to Bitcoin. And the other is the collateralization of Bitcoin. So not selling your Bitcoin, but using it as collateral to do more, to borrow stables, to open a position, right? And so Botanix is anchored upon these two core use cases, which is all going to be happening in Bitcoin. And so everyone that I've spoken to who has historically said, yeah, I would never do anything with my Bitcoin and bury it in my backyard. If you say that, okay, you're able to get 10% yield in Bitcoin terms, or hey, you can actually use your Bitcoin as collateral and borrow stables at 5%, which is what you're currently able to do on Botanix, that changes the tenor of the conversation, because that is actually serving what people actually want and need.
What does that mean for Ethereum? Ethereum's definitely in the spotlight right now, performing a little bit better than Bitcoin. What does it mean for them, do you think?
I think Ethereum has a place, of course, within the ecosystem. So I think Bitcoin, the best way to that I mentally model it is the best money ever. It is the most sound money. Algorithmically, with the intrinsic programmatic scarcity built in, it is the best money ever. Anything that touches Bitcoin should be financially impeccably sound. So that is why I think all DeFi should exist on Bitcoin if it touches Bitcoin. But Ethereum has a home for so many other things, right? It has its own DeFi ecosystem. You can do social, you can do gaming, you can build all of these really interesting applications. And I think they all have a place in Ethereum and Solana and other ecosystems. So I think there's room for all of that. But I do think that Bitcoin is a little bit of a black hole, whereby over time, it just ends up sucking up all liquidity. I mean, the Bitcoin dominance chart, right? It just keeps getting more and more of a data point and an outlier for the entire market. And I think that's one thing that the Bitcoin ecosystem hasn't fully caught up on. But I think now with our launch, with other protocols and ecosystems coming online, we're going to see this happen over the next 2 to 5 years, whereby everything really comes back to Bitcoin. But I'm also a Bitcoin maxi, so I tend to generally align.
Couldn't tell.
Absolutely. So I just can see it all converging back to Bitcoin. But to be honest, I don't think everything belongs on Bitcoin, right? Because there are those technical limitations. You know, it's never going to be the fastest or the cheapest to transact on Bitcoin. And so that's why I think it makes most sense for those financial use cases. But for a social use case or a gaming use case, there's probably more purpose-built blockchains for things like that.
It's a little hard to imagine ETF held Bitcoin or, custodied Bitcoin that supports ETFs to basically have access to something like this in the near term. But you did mention treasury companies. And I think, DATs with enlightened CFOs should leap towards solutions like this to make their Bitcoin work. It probably would make their DATs in a way more attractive than ETFs, because they'll inherently have these kind of benefits of flexibility and potentially yield and basically Bitcoin banking and trading, right? So I imagine that this, alongside your native users and your retail users, is a big segment you're trying to chase down. How do you think that will evolve, and how do you get the messaging through to the potential buyers of the DATs to say that this is an enhanced way for you to have exposure?
So with the DATs, I think they're all very, very interested in the concept of Bitcoin yield and Bitcoin financialization. The issue is there hasn't been much, right, in the Bitcoin ecosystem for so long. This is a very new moment that we're living through. You saw a lot of talk about Bitcoin Renaissance last year, and now with Botanix, with other projects, are really trying to bring this forward. And so I think that they're all very interested. We're chatting to a lot of them, and they're all excited about this prospect of Bitcoin yield and Bitcoin collateralization. So we are going to see them as the first adopters, but I wouldn't necessarily count out the ETFs, because we are living in unprecedented regulatory times. We have a very pro-crypto government that is very amenable to broad regulatory change. So I'm seeing a lot of experimentation and innovation, even at the levels I couldn't even fathom before, even at the ETF level, to accept things like Bitcoin staking and Bitcoin yield products. And I think that's going to be an interesting thing for us to observe as well and be a part of.
Do you think that this actually might cause some, let's say, individual people who might be holding their Bitcoin on centralized exchanges to sort of take their custody back, because it will avail them of the opportunity to experiment and then actually use services like Botanix?
Absolutely. I think the key thing for people who hold Bitcoin on centralized exchanges or fintechs or ETFs, well, all boils down to user experience and education. So we can scream all day long about decentralization, how important that is, and how important self-custody is as a concept. But unless it is ruthlessly clear and simple for them to do so, I think that's going to be a harder leap. And so that's something we're hyper focused on at Botanix. So my number one barometer is, can I onboard my father to this? Boomer. And I actually did onboard my dad to Botanix. And so for me, that was really important, because I think that is the eventual target user that we want to go for, is someone who holds their Bitcoin in an ETF and is willingly then able to bring that Bitcoin from an ETF, bring it back to their own wallet, and then deploy into Botanix, be able to stake, be able to use it in a DEX or on another platform. And so that is the medium-term vision of Botanix, is getting this user back on chain. Because decentralization, it may not be the thing that wins them over and brings them back, but the solid user experience, education, and awareness will. And having a very sound fundamentals of, here's where the yield is going to come from. Here's what you can do on it. Here are the opportunities. That's where the ecosystem building becomes extremely important. So we need to have compelling opportunities available for folks to do things on Botanix. And that's what we've been building for the past 2 years.
Alisia, thanks so much for joining us this week. It was a pleasure.
Thank you so much. It was great meeting you both.